Hello, and thank you for checking out the latest edition of our monthly Market Watch. In this video, I'm going to be taking a look at silver and specifically why I have not been buying it. The internet is ablaze with headlines of a short squeeze. The biggest short squeeze in history is heading for silver. All following what we've heard, I'm sure you've read about all regards Reddit and GameStop and AMC and a number of other markets that have had the conditions and have been ripe for a short squeeze. But I want to take a look at silver and actually show you what's going on in silver and why it's not actually ripe for a short squeeze. There have been conditions certainly within the likes of GameStop and AMC and even a number of the silver miners do have the conditions where traders are heavily short those markets and are ripe for short squeezes. But if we look at silver, we're going to look at silver, the latest commitment to traders data that we have here on our website, and I'm going to be focusing on the non-commercial data. They're the trend followers, they're the traders that you would need to have a squeeze in order to get those short squeeze conditions. And if we actually look at their short positions, they're actually at a low level relative to where you would expect them to be for a short squeeze. If you look at recent short squeezes, whenever the speculators were very, very heavily short this market, you look at the 2018 lows, and we look at the 2019 lows as well, where we did have the conditions for a short squeeze, heavily short, and the market rallied both times. Compare that position to where we currently are, and we have a fraction of the total number of contracts. We've less than 30,000 contracts at the minute, whereas in both of these we're up towards 100,000 contracts. And if we actually look at their buying, in those periods they were net short. And what we have at the moment, actually, we're far from being net short. They're actually very much heavily net long this market. So we do not have the conditions at play at the moment to have a short squeeze in silver because they are simply not heavily short in the market. If anything, they're heavily long. They're not at extremes, but they're typically, their conditions are more towards a top as opposed to a bottom. If we actually look again at the short contracts, the heavily short, you will see we're typically market lows, market bottoms. We see the market rally. The reduction in the short positions are typically to conditions for a top. And if you look at where we are at the moment, we are certainly closer to the conditions for a top in a market as opposed to a short squeeze and actually a big rally. So what do I want to trade this month? What is actually of interest? Well, we'll start off by looking at some seasonal patterns to give us a bias and help illustrate which markets could potentially rally or see nice moves. February typically is one of the good moving months. January can be a little bit range bound, and a number of the currencies have been quite range bound, which is actually typical for January. We'll start by looking at the seasonal patterns here. I'm going to take a look at silver first of all. You'll see we've got three lines on the seasonal charts. There's different patterns on our website. You can have a look at each of them yourself, but the three lines essentially, we've got the historical seasonal pattern, which most people will be familiar with. We have the weighted average seasonal pattern, which gives more weighting to recent years' price action, so we can see if the pattern has evolved over recent years or not. And then we have the election cycle, and this year being the post-election, we have the post-election years also overlaying on the chart, so we can see if there's variance within those years. Looking at silver, we can see actually there is a seasonal bias on all three of the patterns. That's essentially what we're looking for. Looking for agreement in those periods. And there is a slight bullish bias in here, but if we just looked at the conditions and the commitment of traders, I'm not expecting to see a large rally through this period and through February. I think that most likely we could oscillate around here, not do an awful lot in February and actually continue to the downside. But if we get into March, I'm not expecting a significant low in silver till we get into the April lows, possibly even into the July lows, where I think we're getting in towards the more conditions for a sustained move to the upside. And certainly we'll be looking for a lot more buying on the commercial side as we get into approaching those lows. But at the moment, we do not have the conditions for a rally in silver. Certainly do not have the conditions for a short squeeze. So what do I want to trade this month? What is at the top of my list? There's a number of markets. You check out the seasonal patterns for yourself. There's a number of markets that are very, very interesting. British pound, euro, Japanese yen. but one that I would probably be driving that quite significantly. You can see the seasonal pattern here of the US dollar range bound through January, which I said earlier, we typically have a lot of currencies that do that, and that's essentially what we've done. But if we get into February, we typically make a low around the 2nd, 3rd of February, and you'll see all three of the seasonal patterns are all in agreement, all heading higher, and the election year is actually significantly stronger than both the weighted average and the historical patterns. So there's certainly a bullish bias in here seasonally for the dollar, which would obviously be negative for the likes of euro, pound, Aussie, Kiwi, etc. across the board if the US dollar is performing well. If we look now at the conditions, what we have in the COT data for the US dollar, now we will actually see a market that does have the conditions for a short squeeze. It's one where we actually look, again, if we isolate the short positions of the non-commercial traders, the traders that you would need to see heavily short in order to actually create a short squeeze, you will see they are heavily short. They're up towards the extremes, which we typically associate with market lows and actually rallies thereafter. Look, particularly is when we had the big extremes in 2014, when they were very, very much heavily short in this market. That's what started the classic short squeeze in here after consolidating for quite some time. There were heavy sellers in here, and they had to cover and started to buy very, very quickly as the market accelerated. That's the kind of conditions that we can see that we're developing in that area. If we look at where we're at now, just zoom in a little bit closer, you can see they're very much heavily on the short side. Not on the long side at all. No interest in buying this. Very much heavily short. So seasonally, we have a bullish bias for February. The conditions where the speculators, the trend followers, are very much heavily short, and if we start to see a bullish momentum in this market, we will actually have the conditions primed for a short squeeze. If we look at the daily chart now for the dollar index, you will see we've been building this base in here for quite some time, and I say the trend followers are still very much heavily short. Look at the seasonal pattern. I think they're going to try and sell this again. I don't think they're going to give up that easily. And you can see the sort of the pattern I've mapped out here. But I do see a larger rally coming into play in this market. I think it may come as we go into next week, sort of the middle part of February, start to rally and head up towards sort of the 92.50, 93 area. So, but I want to be long on this market. Whether I'm a trader and I'll be long on here in retests of 91. For that to happen, I need to see price getting a little bit higher. I want to make sure we've got a confirmed breakout. We've just got above a nice little level of resistance here at the moment, but prices hovering around this area. Potentially might have a field breakout. I say I'd actually like to see traders try to bring it back down around the 90-20 area, even back into 90 towards those lows. And make a new low here where I'd aggressively want to be a buyer, and possibly the higher low here again for that break as we go through the middle part of February. And obviously in the back of that, I'll be looking for shorts on the euro whenever I'm convinced that the dollar is actually moving higher. And also the British pound is another market that I'm really keen to be short in. Again, if you take a look at the seasonal patterns on our website, you will see the British pound is actually one of the seasonally the weakest markets through February. Across the board too, so cross pairs, pound crosses, pound Aussie, pound Kiwi, etc. very much would be on the list as well once we see a breakdown. We've got this bearish rising wedge at the moment, but we're just consolidating in here. I'd be wary of being too aggressive within this chop area. Dropping down into the 4-hour chart, you can clearly see areas of support where buyers are coming in consistently. We need to see those buyers disappear. We're sitting above the monthly pivot, so we need to see it down below the 136 area. Get below this point now, we'll certainly be a lot more aggressive looking for breakouts as we come through here, ideally sort of retests, but it depends on your trading style. But there is the potential for a lot more momentum compared to what we have had in January, where the conditions generally are quite range bound. But February, as I say, typically open up, markets tend to get a little bit more legs and a bit more of a follow through on them. But certainly there's a lot hinging on the dollar index and the dollar strength that we potentially can see, and it's certainly building there. And we have the conditions for that short squeeze, as I say, whereas we do not have the conditions for that short squeeze on silver. If it's something that you've been considering because you've seen the headlines, recommend go and check the data, we have all the information there. We can see if there is a potential for a short squeeze. Go and take a look for yourself. As it stands at the moment, say the seasonal bias is slightly to the upside through this period, through February, but I am not seeing a big move, sustained move, certainly not driven by a short squeeze at all. If you want to follow along and hear more information like this, I will be doing a live stream every Monday night. By all means, follow along, join in. I'll be going through the dollar index and how I'm going to be hoping to capitalize and where I would like to trade as we start to see the momentum kick into play. So join me every Monday night, 8 p.m. UK time, and I'll be going through all the relevant markets every week.